Most people never build real wealth because they chase tactics before they build strategy. Over the next 20 minutes, I'm going to walk you through a 12-week step-by-step blueprint. This is the exact same process that I use with private clients who manage 7-figure portfolios. If you follow every single week the way it's laid out, your net worth will begin to compound on autopilot without needing to time markets, chase trends, or micromanage everything. So eliminate distractions and just log in for the next few minutes. This might just be the most valuable financial roadmap you've ever seen. Week 1 is all about getting clarity. This means pulling every financial statement that you have, including checking, savings, brokerage, retirement accounts, real estate holdings, business cash flow, and any private equity notes. Now you want to list out every liability for mortgages, credit cards, HELOCs, personal loans, car notes, etc. And then we're going to create a 2-column spreadsheet labeled builds wealth and then drains wealth. You want to go line by line and assign every asset or debt into one of these columns. Next, you want to calculate your financial runway. You want to take the average of your last 3 months' income and then subtract your fixed living expenses. Whatever's left over each month, that's your monthly surplus, and that's your dry powder for building wealth. Finally, snapshot your starting net worth. You can do this in a tool like Tiller, Monarch, or just Google Sheets. Total up all your assets, subtract all liabilities, and that's going to be your baseline. We're going to revisit this in week 10. And pro tip, attract the lowest balances in your checking account each month. That one data point will reveal hidden cash flow leaks faster than any budgeting app. Week 2 is all about strategic expense optimization. We're not just penny pinching, we're reallocating the inefficient cash towards scalable wealth. We want to make sure that we cut strategically. So start with your mortgage, request quotes from at least 2 local lenders and 1 online lender as well. If you can lower your rate by even 0.5%, then refinance and automatically redirect those monthly savings into your investments. Next, you want to review your insurance stack. Call your provider, ask for higher deductibles, bundle your auto, home, and umbrella under one carrier, and most people save between 8 to 12% just from this step alone. Now let's talk about tax. You can explore things like cost segregation and also bonus depreciation if you own rental properties or are looking to buy one. If you're structured as an S-Corp, you want to reevaluate your salary to distribution mix to minimize self-employment tax. Now, I don't care how much money you make, but you also want to do a subscription audit. Download your last 2 credit card statements and highlight anything you've used fewer than 3 times and cancel it today. And most importantly, redirect those savings. Set up an automatic transfer that matches the amount that you just cut and send that straight into your brokerage account starting next week. Week 3 is automating our investment systems. This is where we remove emotion and inconsistency from the game. Sophisticated investors automate everything because discipline beats intensity. Here's my updated allocation model, and it's tailored to long-term asymmetric upside. First is 40% into Bitcoin or a spot Bitcoin ETF. This is going to be your high conviction growth engine. Set up a recurring weekly buy. Don't try to time it, automate it, and forget it. Next, we're going to put 20% into total US stock market index funds like VTI or SPLG. You're going to be buying the productivity of American businesses without picking winners. We're going to allocate 30% into tech and AI focused ETFs. This is your exposure to disruption. So think QQQ, BOTZ, ARKQ, and SMH. Long-term upside lives here. Then we're going to allocate 10% into global or emerging markets. This is going to give you international exposure and it's going to protect you from US-centric blind spots. Set all this stuff to happen weekly, not monthly. Weekly buys help smooth volatility and reduce timing risk. Next, we're going to move idle cash into high-yield money market accounts or treasury-backed cash sweeps. You should be earning at least 4.3% right now. You can even enable dividend reinvestment on all eligible assets so every dollar compounds without friction. Week 4, we're going to do high-level debt management. Here's a common misconception. Debt isn't bad. Misused debt is. We want to first start by eliminating toxic debt. Anything with an interest rate above your expected investment return. That usually means credit cards with over 12 to 15% plus in credit card fees. Then you want to convert personal debt into business or secured debt whenever possible. A 0% interest business credit card with a 12-month window is a smarter bridge loan than a 17% APR personal card. If you have a mortgage under 4%, then don't pay it off. Refinance it into an all-in-one loan or offset your mortgage that uses your deposits to automatically reduce interest accrual. It's one of the most efficient ways to sweep your liquidity against your debt. You can even open a HELOC and leave it unused. Think of it as dry powder for short-term, high-return opportunities like private loans or quick flips. Finally, negotiate everything. Call your lenders, ask for a rate match, a lower payment, or a term extension. This simple ask of asking can unlock concessions that most people leave on the table. Week 5, intelligent liquidity management. Liquidity is your oxygen. It's not just about how much cash you have, it's about how quickly you can access it when things break or opportunities rise. Your target is going to be 6 to 12 months of living expenses and liquid reserves. Now let's talk about how to structure it. Tier 1 is 1 month of expenses in your checking account. This is going to be your operating float. Tier 2 is 2 months in a high yield savings account or an FDIC insured cash management account. Tier 3, the remainder, we're going to put into ultra short-term treasury ETFs or institutional grade money market funds. You want to set up automated sweep rules so that anything above your tier 1 checking balance moves into tier 2 weekly. This is going to create frictionless discipline and protects you from lifestyle creep. When your liquidity system is optimized, you can move fast on high return opportunities without stressing your core portfolio. Week 6, let's talk about advanced portfolio structuring. Now we're going to bring everything together. Your asset allocation isn't just about returns. It's about resilience, volatility tolerance, and long-term asymmetric upside. Here's the portfolio model I recommend right now. 40% Bitcoin or a spot Bitcoin ETF. And And yes, I know it's volatile, but for long-term wealth creation, it's one of the most asymmetric bets of this generation. 30% we're going to put into total market or S&P 500 index funds. This is going to be your base exposure to productive US companies compounding over time. 25% we're going to allocate to tech and AI focused ETFs. You're not just buying companies here, you're buying exponential change. And the remaining 5% we're going to put into global or emerging market funds, a small but important hedge against geographic concentration. I also like to do quarterly stress tests on my portfolio. You want to model a 30% equity drawdown, simulate a 50% Bitcoin correction, and a 2% interest rate spike. Ask yourself, could I sit through this without panic selling? If the answer is no, then adjust your sizing, not your strategy. If this is starting to click for you, but you want to see how to actually implement it into your own portfolio, then you can join me on my Legacy Wealth Blueprint. It's going to be a free live class where I walk you through this exact strategy in real time. I'm going to show you how my clients are allocating their capital, break down the systems to save on tax, and generate real wealth. The spots do fill up fast, so you can hit the link in the description and grab your seat. Week 7 is aggressive income expansion. Now, most people focus so much on cutting expenses that they forget the real lever, expanding your income. This week, you're going to focus on stacking new profit centers, sources of income that compound, automate, and scale. You can invest into cash flowing digital assets, a small SaaS product, or even Airbnb arbitrage. And don't underestimate net worth leverage. Schedule one coffee meeting per week with someone in your industry. Instead of asking for help, you can ask, hey, what bottleneck can I remove for you that earns me a piece of the upside? The right question can unlock everything. Week 8 is clearly defining financial objectives. We're going to start with 3 time horizons. First is the 12-month goals, 5-year goals, and then 10-year goals. Be very specific, not just be financially free, okay? Instead, you can say something specific like grow my net worth to $5 million in 5 years, or generate $20,000 a month in passive income within 10. And next, we're going to break down those into quarterly OKRs, or objectives and key results. Here's an example. Objective, expand passive income. Key result, acquire one cash flowing asset that produces $1,500 per month. Then you want to build accountability into the system, so you can join a mastermind group, or you can surround yourself with people who are going to call you out when you drift and support you when you push harder. Week number 9 is all about mastery of credit and leverage. And when you use it correctly, it becomes a form of leverage that fuels business growth, rewards hacking, and strategic liquidity. First, you want to start by optimizing personal credit. Keep utilization under 7%, pay your statement balances 2 days before the cutoff date, not just the due date, and freeze your credit reports unless you're actively applying. You want to make sure that you protect your profile. Next, you want to apply for 3 no personal guarantee business credit cards like Brex, Ramp, or Divvy. And then add 1 true charge card like Amex Platinum to expand limits based on spend. And then use your EIN and ensure your LLC is properly registered with Dun & Bradstreet. Now let's talk about rewards. Route every major expense, especially taxes and advertising, through a 2x or a 3x transferable points card like Amex Gold or Chase Ink Preferred. Then you can transfer those points to airline or hotel partners for first-class flights and luxury stays. Week 10, we're going to recheck our net worth. If you don't measure it, you can't manage it. Wealth is not built by guessing, it's built by tracking and course correcting. This week, we're going to update every line item in your net worth tracker. Equity should be marked to market using current share prices. Real estate should be valued using Zestimate, Redfin, or comp-based estimate with a 5% haircut for realism. Update every liability after the most recent payment posts. Then you want to chart your monthly net worth trend line. You're looking for at least 1% month-over-month growth, and if you're not hitting that, it's time to revisit either your income engine or your allocation strategy. Week number 11 is mid-course optimization. Now we're almost at the finish line, but this is where most people stall. This week is all about refinement. We want to do a full 2-month look back. Compare your actual investment contributions to your target allocations and measure your portfolio performance against relevant benchmarks. Review your personal and business spending against your ideal budget. Now identify the laggards. If any asset has underperformed its benchmark by more than 3% and you don't have a strong thesis to hold it, then you want to cut it. Then you want to redeploy that capital into your winners. Next, write down 1 key lesson from the last 10 weeks. That becomes your new rule. Every cycle, you're not just growing wealth, you're also evolving your decision making. And finally, week 12, we're going to set our high impact stretch goals. We're going to end with the most powerful lever, vision beyond your current reality. This week is all about audacious goals. Here are a few examples. Let's say you want to acquire a 10-unit rental property in the next 12 months, or accumulate $1 million in liquid Bitcoin before the next halving cycle, or even building enough passive income to replace 100% of your living expenses within 3 years. Now we're going to reverse engineer each one. Let's say you want the 10 units. Analyze 3 deals per week and submit 1 offer per month. Or let's say you want the Bitcoin stack. You want to set your weekly buy, multiply it, and stick to it. Or the passive income, set up 1 new income stream per quarter and scale it to $2,000 per month. Finally, schedule quarterly strategy reviews on your calendar right now and treat them like board meetings. Show up, measure progress, and make bold pivots. You're literally the CEO of your wealth, so start acting like it. All right, so now you have the complete 12-week execution map. This strategy works if you do, but only compounds if you stay consistent. If you got value out of this video, share it with one person who's serious about changing their financial future. And again, if you want to join my free live masterclass that I'm hosting this week, you can check the link in the description. And for the next video, check out this video or this video that the AI gods think that you're going to like.